Citadel's $600 crypto bet now spans two rival exchanges. Citadel Securities' $400 million investment in Crypto.com this week did more than mint a new $20 billion exchange. It brought the Wall Street market makers' total announced crypto exchange stakes to $600 million spread across two direct competitors. Crypto Slate connected the two deals on July 18, 2026, noting that Ken Griffin's firm now sits on both sides of the same race. The other position dates to November 2025, when Citadel Securities put $200 million into Kraken, also at a $20 billion valuation. Two rivals, two identical marks, one backer. The moves land in a quiet tape. As of July 18, 2026, Bitcoin traded near $63,909, up 0.4% on the day, with Ether at 1,840, down 0.8%, and the Fear and Greed Index at 34, or Fear per coin market cap. A firm writing nine-figure checks into private exchange equity during a fearful market is positioning for structure, not chasing a rally. Two rivals, one identical price tag, the matching $20 billion valuations are the detail worth sitting with. Crypto.com called the Citadel deal its first institutional funding round in a decade. Kraken took its check 8 months earlier at the same number. That a professional trading firm arrived at the identical figure for two competitors suggests it is pricing something both companies share rather than a story unique to either one. That shared thing is order flow and market structure. Citadel Securities is one of the largest electronic market makers on Earth, and its business is liquidity, not venture upside. Owning a slice of two large venues gives it a structural seat at whichever one wins share, and a hedge if the lead changes hands. The prize is tokenized markets, not spot crypto. Both exchanges are aiming past spot trading. Crypto.com said the new capital will accelerate expansion into tokenized securities and derivatives, bridging digital asset and traditional markets. Kraken has pushed a parallel plan to bring conventional financial products on-chain and widen its menu beyond crypto. That is the same Wall Street prize framing, a multi-asset venue where stocks, bonds, derivatives, and tokens settle on the same rails. Citadel Securities makes markets across U.S. equities and options today. A stake in the exchanges building on-chain versions of those instruments is a natural forward position for a firm that already prices that risk for a living. The push fits a wider 2026 pattern. Institutions have filed for a wave of spot ETFs. CME cleared record crypto futures volume last quarter, and clearinghouses and custodians have spent 2 years wiring themselves into digital asset venues. A market maker taking equity in two exchanges is the trading desk version of the same migration. An asymmetry worth noting, the two deals are not disclosed on equal terms. Only Kraken has publicly detailed Citadel's liquidity and market structure role. Crypto.com's operational relationship with the firm, and whether the two stakes involve any coordination, remains unstated. For now, the cleaner read is a portfolio of exchange bets rather than a single integrated strategy. Though the gap in disclosure leaves room for that to change, private valuations also are not liquid marks. A $20 billion figure struck in a strategic round can move sharply if either company raises again or pursues a listing. Treat both numbers as negotiated reference points between two parties, not market clearing prices. Practical read for users of either exchange, for people holding balances or spending through either platform. A well-capitalized strategic backer is a stability signal rather than a product change. Nothing about these raises alters fees, rewards, or card terms today. Both firms run crypto card programs, and Crypto.com's rewards still tie tier benefits to staking its CRO token, a mechanic that exposes cardholders to that token's price regardless of the advertised cashback rate. That caveat is unrelated to Citadel's stake, but worth weighing before locking up tokens. The larger signal is about who is willing to own crypto trading infrastructure in 2026. When the firm that prices risk for Wall Street writes $600 million into two competing venues during a fearful market, it is a statement about where settlement is heading. Readers deciding where to keep balances or spend can weigh that against the full range of crypto card options and the custody trade-offs each carries.